If you've been looking at property in Florida, you've probably run into a home or two with significantly lower taxes than the homes around it. How does this happen and what does it mean for you? Yo, I'm Adrienne, longtime Florida realtor, and I'm here to help you get your Florida life. Happy Wednesday, everyone. If you're new here, new videos come out every Wednesday, but you can subscribe to follow along. I also have a new feature on the channel. If you would like to meet with me to talk about your real estate goals, you can. I'll put a link in the description and you can book a Zoom or a regular phone call. I'd love to chat with you. Now, let's talk taxes. Taxes are not so much fun to talk about, but you need to understand them. They do get confusing when you're searching for a house. You'll understand why in a minute. It's so prevalent that this video has been requested by more than one of you. By the way, if there is a video you'd like to see, let me know in the comments below. Often when I meet new customers, they will say something like, "Oh, the tax is down there." And I have to remember where they're from to know what they mean. If they're from California or New York, they're saying, "Oh, the tax is down there, yay." If they're from the Midwest, not so much. It's more, the tax is down there. Whatever you think, one of the most common questions I get asked is, how come this house has such low taxes? Did I just find a unicorn in the tax system? No, probably not. I'm going to get technical here for a minute, but hold on. You don't have to understand every word of the technical. I'll break it down further as we go along. If you want to dig even deeper, I'll put a link to the tax collector's website in the description and you can get all the details on taxes you want. But I'm going to talk about them as they pertain to you as a real estate buyer and eventually owner. First, let's talk about how our taxes are determined. The tax assessor office decides on the just or market value of the property. They take that just value and subtract the assessment differential and the exemptions. Most of the rest of the video is about assessment differentials and exemptions, so if you don't get it right away, again, hold on, you will. An assessment differential is basically a discount the homeowner is getting, just like an exemption. The just value minus the differentials and the exemptions equals the taxable value. Then there is a millage rate, which is a tax rate. You divide the taxable value by 1,000, multiply that by the millage rate, and you get your ad valorem taxes. Now, the millage rate stays the same for the houses in the same area. The taxable value does not. And I'll talk more about ad valorem versus non-ad valorem in a minute, but know that the biggest part of your tax bill is typically the ad valorem tax. And this is where we see the big differences come into play. That's because of the exemptions and the differentials. There are many exemptions a homeowner can get. The most common one is the homestead exemption. A homestead exemption is for anyone who makes their Florida home their primary residence. The homestead exemption provides a reduction in the assessed value of the property for tax purposes. The exemption amount is up to $25,000 for singles and $50,000 for a married couple. That means that the first $50,000 of a property's assessed value is exempt from those ad valorem taxes. The biggest cause of confusion is the Save Our Homes assessment limitation. This is actually a differential. This caps the annual increase in the assessed value of a homesteaded property to a maximum of 3% or the percentage in the consumer price index, whichever is lower. This provision helps protect homeowners from excessive increases in their property taxes, even if the market value of the property rises significantly. This can have the same effect you see in compound interest. If somebody owns the home for many years and the assessed value only goes up 3%, eventually they will be paying much less than the homes around them. When you buy, this number resets. So even if you are going to homestead the property, you are not going to get the compounded discount they've received. The most important thing you need to know is when they assess the taxes for you, you will not receive this discount. You can homestead it and the clock will start ticking for you. So in 10 years, you will have the lowest taxes on the block, but you don't get the discount that they have built up over years. If you move within Florida, you can transfer your Save Our Homes benefit. This is called Potability. Florida allows homeowners to transfer the Save Our Homes benefit to a new homestead property within the state. This means that if you sell your current homesteaded property and purchase a new primary residence, you may be able to transfer the accumulated Save Our Homes benefit to your new home. There are some conditions that apply though. There are also discounts for widows and widowers and veterans. If you're a vet, you should contact the city or the county. These benefits have different tiers. I've seen it where vets pay very little to no taxes. Now let's get to the ad valorem and non-ad valorem. Our taxes are made up of two parts, the ad valorem, which is based on the real property value, and the non-ad valorem assessments, which is based more on square footage and the resources like canal maintenance. You'll see that one in Punta Gorda Isles or Burnt Store Isles, CDD fees in some communities. We pay our ad valorem taxes in arrears. The bills come out in November. In Charlotte County, you can get a discount if you pay early. You get a 4% discount if you pay in November, 3% in December, 2% in January, 1% in February, and then in April, your taxes are considered late and you start paying fees. This may be different in different counties. You should also know when you buy, the title company will prorate the taxes from the seller, so you'll collect a little bit for this year's taxes. I hope that helps. Thank you for watching. I will see you next week.